Hello everybody, welcome to Wealth Window. Today we are going to discuss retirement accounts, and specifically compare the two main choices, which are Roth IRAs and 401ks. By the end of this video, you will be ready to make your own decision on what retirement account is right for you. Be sure to stick around until the end of the video, where I share the platform that I personally use for my retirement account. Now let's get into the video. To start the video, let's begin by discussing the basics of both Roth IRAs and 401ks, and then we can begin to differentiate between the two retirement accounts. First, we will start by explaining the intricacies of both accounts. A 401k is a retirement savings account that allows an employee to defer paying taxes on their portfolio earnings until they withdraw the money from the account during retirement. It is typically offered through your employer and must be funded by payroll deductions. So every time you get paid, you put some portion into your 401k. Same way that taxes are taken from your paycheck. Just think of this as paying your future self first. So if I choose to allocate $100 each paycheck into my 401k, the money would be taken out automatically before it reaches my bank account. This is a great thing for many people because if you never see the money, then there is no chance that you could spend it. Now, it is important to mention that if for some reason you find yourself in a dire need of money before retirement, then you can withdraw money from your 401k account, but that will incur a penalty of somewhere around 10%. The second type of account we will discuss is a Roth IRA. This type of account has tax benefits as well. However, they are different from those that come with a 401k, and not everyone may qualify for them. Instead of deferring taxes on an individual's income and earnings, contributions into a Roth IRA are made on an after-tax basis, and under current law, you pay taxes upon withdrawal. There is much more flexibility with this retirement account than there is with a 401k. For example, if you want to withdraw some money before retirement, you can simply withdraw the amount you need without penalty. This can be huge for people that may be hesitant about getting into investing because it provides them with an easy way to get their money out of their retirement account in case of emergency. So if you happen to be a big worrier about the future, then a Roth IRA may be best for you, simply because your money is never locked away from you like it may seem with a 401k. I mentioned this earlier, but I think one of the most important things to consider when deciding between retirement account options is income tax rates. No one can predict the future, of course, but doing your own research can be a good way for you to understand what type of income tax rates you may be looking at when you retire. Will they be severely up or severely down? This isn't incredibly important, and there isn't a great way to accurately predict the change of tax rates. However, if you do strongly believe that income tax rates will multiply by the time you retire, then you may be better off with a Roth IRA that taxes your contributions immediately. If you do have both a Roth IRA and a 401k, you will almost surely see your 401k grow at a greater rate. But always remember that money has not been taxed, and Uncle Sam is sitting between you and that money. Roth IRAs are also very advantageous to people who expect to double and even triple their income from what it is right now to what it is when they retire. Again, in this situation, the advantage comes in lower taxes, because you are currently in a lower tax bracket than you expect to be when retiring. So less of your contributions will be paid to taxes if you pay them when you contribute. For example, if you make $60,000 a year right now, but your career field has an average salary of around $120,000 and up, then it may be smart for you to take advantage of a Roth IRA. Think of it from the perspective that the contributions you made when you were making $60,000 a year will be taxed in the $120,000 tax bracket if you use a 401k or other pre-tax retirement account. The major disadvantage of Roth IRAs is that the yearly contribution limit is somewhat low. As of 2025, you can only contribute $7,000 per year to your Roth IRA. Meanwhile, the max yearly contribution limit for a 401k is $23,500. With that said, I have told you a lot about why you should use a Roth IRA, but not so fast. You still have to hear about the advantages of 401ks before you can head to your brokerage site. Also, be sure to stick around to the end where I tell you the platform I use for both my retirement accounts and my brokerage account. The most important advantage of a 401k is the employer match. Most employers will match your 401k contributions up to a certain amount. To find out what percent your employer matches, just go to your company's HR department and ask. It is critical that you contribute at least enough to hit the employer match, because this is literally your company giving out free money. I mean, it doesn't get any easier than that. So let's say your employer offers a 5% match, then you must contribute at least 5% to get the match. You can contribute more if you like, but for now, let's just make sure we are contributing the minimum percent required to receive 100% of the employer match. Another advantage comes in the form of tax benefits when it comes to taking out loans. You are allowed to take out loans against your 401k account, and they do not have to be paid back until whatever date is agreed upon with the bank. This can be an incredibly smart move for people who need a loan but do not have a ton of capital or credit. I think that is enough information about the two most popular retirement accounts to get you started. The choice is yours in the end, but I will take a few moments to go over what I think is the best way to go about your retirement accounts. Now, of course, this is not financial advice and is just for educational purposes. So this may be a bit anticlimactic, because I am sure you were expecting a definitive answer as to which account is absolutely better. But I personally believe that having both a Roth IRA and a 401k is the best way to reach your retirement goals. So once you have set up both accounts, the first priority is to contribute just enough to your 401k to receive the employer match. Next, I suggest that you contribute as much as you can to your Roth IRA, up to $7,000 per year, or about $583 a month. If you can afford to contribute the max, then do so. You have now contributed up to your employer match in your 401k, and you have added to your Roth IRA. If you have more money left over, you are free to do what you wish with it because you are now set up for retirement better than most of the population. However, if you are an overachiever and have extra money each month, you can contribute that to your 401k up to $23,500 per year. At this point, you have a strong system set up for your future, and you can just sit back and watch your money grow. I want to now briefly discuss the platform I use for my Roth IRA, which is Fidelity. Fidelity is very easy to use and has a pleasing dashboard where you can view all of your accounts and balances from. They pride themselves on allowing the common man to get into investing, and they make sure that there are no hoops to jump through when selecting your investments. Not to mention all of the thorough research that you can find on the platform for free. Fidelity really is a one-stop shop for all your investing needs. Fidelity provides free articles, webinars, and charts that are designed to help beginners learn the information they need before investing for the first time. I really enjoy using Fidelity for my Roth IRA, as well as my brokerage account, so I couldn't recommend it enough. Set up your account in less than 5 minutes and begin contributing to your retirement today. All right, now you have the knowledge you need and the platform to do it on. So go take action now. You will be happy you did. That will wrap up this video. Subscribe and turn on notifications so you don't miss more videos related to personal finance and much more. Be sure to check out our upcoming video series about investing for beginners, and I'll see you in the next one. Take care.